What's happening, crypto crew? Get ready for a rapid-fire rundown of the most explosive news hitting the digital asset space right now. The market is moving at lightning speed, and if you miss this, you miss everything. We're diving deep into stories that could redefine the financial landscape, pushing boundaries and sparking massive conversations. From major institutional shifts to surprising new players making waves, this is the intel you absolutely cannot afford to be without. Buckle up because the future of finance is unfolding before our eyes, and we've got the inside scoop. Let's get into it. First up, a seismic shift in how the big players are embracing digital assets. Next, we're dissecting the critical signals from the market itself, analyzing whether the current inflows mean a surge is coming or if a pullback is on the horizon. This is the kind of data that keeps traders ahead of the curve, so you won't want to miss this deep dive into the charts and the sentiment. Then, we're spotlighting a major global food company making a bold move into the crypto space, engaging experts to chart a course for a Bitcoin Treasury strategy. This isn't just about holding assets. It's about a foundational shift in corporate finance, with implications for how businesses operate and manage their wealth in the digital age. And finally, we're talking about a high-profile family making serious waves in the crypto world, from million-dollar predictions to ambitious ventures that could reshape financial freedom. Stay locked in for all the details. Don't forget to hit that like button, subscribe for more, and ring the notification bell so you never miss an update. A paradigm shift in digital gold. Get ready, because the narrative around Bitcoin is undergoing a dramatic transformation, moving from a speculative playground to a cornerstone of serious financial stewardship. We're witnessing an unprecedented wave of corporate Bitcoin adoption in 2025, with businesses pouring over $12.5 billion into the cryptocurrency within the first 8 months alone. This figure doesn't just surpass last year's total, it signals a fundamental shift in how enterprises view and utilize digital assets. The driving forces behind the surge are clearer regulatory frameworks, growing institutional acceptance, and a robust market environment that makes Bitcoin an increasingly attractive treasury asset. Leading this charge are Bitcoin Treasury companies, publicly traded entities that have become the vanguard of corporate Bitcoin holdings. These firms now account for a staggering 76% of all business purchases and a dominant 60% of publicly disclosed holdings. They've effectively created an indirect pathway for institutional investors to gain exposure, democratizing access to Bitcoin's potential benefits. But the adoption isn't confined to these specialized entities. Traditional businesses across a spectrum of industries are integrating Bitcoin for payments, treasury management, and strategic investments, weaving it into the fabric of their operational financial strategies. The global reach of this adoption is equally remarkable. The Asia-Pacific region is blazing a trail, boasting a 69% year-over-year increase in on-chain activity. India has emerged at the forefront of Chainalysis's 2025 Global Crypto Adoption Index, underscoring the expanding utility of blockchain technology in emerging markets, with the United States and Pakistan also showing significant adoption. This institutional embrace is further validated by the performance of spot Bitcoin ETFs. In a recent notable period, these ETFs attracted over $333 million in net inflows, decisively outperforming their Ethereum counterparts, which experienced net outflows. This inflow trend, with Fidelity's FBTC and BlackRock's IBIT leading the charge, reinforces Bitcoin's strengthening position as digital gold and a reliable store of value. Beyond mere holding, institutions are actively reshaping Bitcoin's capital markets. They are building yield curves, credit frameworks, and risk management systems, effectively positioning Bitcoin as a parallel asset class, akin to traditional endowments. This evolution from speculative balance sheets to institutional stewardship signifies a maturing market where companies are developing robust infrastructure, such as Bitcoin-denominated insurers and asset managers, poised to become dominant forces. This institutionalization is also reaching everyday individuals. A Cornell Bitcoin Club survey revealed that Bitcoin enjoys a respectable trust score in many countries, particularly in regions where trust in traditional financial institutions is lower. This highlights Bitcoin's growing legitimacy as an alternative financial system. This massive institutional influx is fundamentally changing the game for Bitcoin. But how is the market reacting on-chain? We're about to find out. Rally or correction, the on-chain dilemma. As the dust settles from a period of significant inflows into Bitcoin ETFs, a crucial question hangs in the air. Is the cryptocurrency poised for a substantial rally, or are we bracing for a deeper correction? This is the razor's edge where traders and investors alike are trying to find their footing, and the on-chain data offers some compelling clues. The initial surge of institutional capital into spot Bitcoin ETFs was a clear signal of renewed confidence. These products, particularly those managed by giants like BlackRock and Fidelity, have attracted billions, effectively validating Bitcoin as a legitimate investment vehicle for a broader audience. This influx has historically correlated with price appreciation, leading many to anticipate a continuation of the upward trend. The narrative of Bitcoin as digital gold is strengthening, attracting capital that seeks a hedge against inflation and a store of value in uncertain economic times. However, a closer examination of on-chain metrics reveals a more complex picture. While ETF inflows are robust, some key on-chain indicators have shown signs of weakness or stagnation. For instance, the number of active addresses, a measure of network utilization, has not kept pace with the price increases. Similarly, transaction volumes, while significant, haven't consistently broken out to new all-time highs in a way that would definitively signal overwhelming retail or institutional demand beyond the ETF vehicles themselves. This divergence between ETF performance and core on-chain activity is what's creating the current uncertainty. Several factors could explain this discrepancy. Some analysts suggest that much of the ETF activity, while significant, represents a reallocation of existing crypto wealth or a flight to perceived safety within the digital asset space, rather than entirely new capital entering the ecosystem. Others point to the broader macroeconomic environment, where interest rate policies and global economic stability still play a dominant role in investor sentiment. If the global economy faces headwinds, even strong ETF inflows might not be enough to propel Bitcoin significantly higher, especially if traditional markets experience a downturn. Furthermore, the market is always sensitive to whale activity, large holders moving significant amounts of Bitcoin. Monitoring these movements can provide early indications of potential sell-offs or accumulation phases. Currently, there are mixed signals, with some large holders appearing to take profits while others continue to accumulate, adding to the ambiguity. The upcoming period will be crucial for deciphering these trends. A sustained rally would likely require a broadening of on-chain activity, with more diverse participants engaging with the network and transaction volumes surging. Conversely, a deeper correction could be triggered if ETF inflows begin to slow, or if macroeconomic factors force investors to de-risk across all asset classes. Understanding these on-chain dynamics is paramount for navigating the current market. So, while the institutional money is flowing in, the underlying network activity tells a nuanced story. But the adoption trend isn't just about large funds, it's also about individual companies making strategic moves. Let's look at one such company. Agri-Giant embraces digital reserves. In a move that underscores the growing mainstream acceptance of digital assets, Sadot Group Inc., a prominent global food supply chain company, has officially engaged Bitcoin Bancorp Inc. to architect and implement a comprehensive Bitcoin Treasury strategy. This engagement marks a significant step for Sadot, signaling a proactive approach to capital allocation and a potential diversification of its financial reserves into the burgeoning cryptocurrency space. The core of this strategic partnership lies in the development of a robust, board-approved Bitcoin policy. This policy will be meticulously crafted to align with the latest accounting standards, specifically FASB ASU 2020-308, which allows for fair value accounting treatment of qualifying crypto assets. This regulatory clarity is crucial, as it simplifies financial reporting and enhances transparency for public companies holding digital assets like Bitcoin, reducing the complexities often associated with volatile asset classes. The strategy outlined is thorough and risk-aware. It encompasses the selection of an institutional-grade qualified custodian, a critical step to ensure the secure and compliant storage of digital assets. Alongside custody, Sadot plans to implement stringent security measures, including multi-signature protocols and cold storage solutions, to safeguard its holdings against potential threats. Furthermore, the company is focused on developing a phased acquisition framework, likely involving strategies such as dollar-cost averaging and the establishment of predefined purchase thresholds. This approach prioritizes maintaining operational liquidity and flexibility, ensuring that the company's core agri-trading operations remain unaffected. Chage Ravid, CEO of Sadot Group, emphasized the strategic rationale behind this decision. He highlighted Bitcoin's potential as a valuable Treasury addition, citing its fixed supply and increasing institutional adoption as key attractive features. However, Ravid was clear in stating that the company's primary focus remains on its core agri-trading business, with Bitcoin diversification being a carefully considered secondary initiative. This balanced perspective reflects a commitment to prudent financial management while exploring the opportunities presented by digital assets. Importantly, Sadot's strategy is explicitly Bitcoin only. The company intends to steer clear of other digital asset activities, such as token issuance, staking, lending, or derivative speculation. This focused approach minimizes exposure to additional risks and complexities, concentrating on the perceived stability and established market presence of Bitcoin. The implementation timeline and ultimate success of this strategy are, however, contingent upon board approval and adherence to all relevant regulatory compliance requirements. This cautious approach underscores the company's commitment to good corporate governance and risk management. This initiative positions Sadot Group among a growing cohort of traditional businesses that are thoughtfully integrating Bitcoin into their financial frameworks. By prioritizing policy, security, and phased implementation, Sadot is demonstrating a mature and responsible entry into the digital asset landscape, potentially setting a precedent for other companies in similar sectors. So, a major food company is getting strategic with Bitcoin, but who else is making bold predictions and building ambitious crypto ventures, potentially reshaping financial freedom itself? Let's shift our focus to that. Trump family bets big on crypto's million-dollar future. In a bold declaration that has sent ripples through the financial world, Eric Trump, son of former U.S. President Donald Trump, has predicted that Bitcoin could skyrocket to $1 million per coin. Speaking at the Asia Bitcoin Summit in Hong Kong, Trump attributed this bullish outlook to the relentless surge in institutional demand and Bitcoin's inherently limited supply. He also pointed to China's significant role in the digital asset space, despite the country's stringent regulations on cryptocurrency trading within its mainland borders, suggesting a complex global dynamic at play. The Trump family's deep and expanding involvement in the cryptocurrency sector was a central theme of his address. Key ventures include American Bitcoin, a significant joint venture with Hut8, a NASDAQ-listed company. This venture is focused on becoming a premier Bitcoin miner and establishing a substantial strategic Bitcoin reserve. Further signaling their commitment, American Bitcoin is reportedly in the process of a NASDAQ listing through a merger with Griffin Digital Mining. The scale of their operation is substantial, with American Bitcoin said to be mining approximately 3% of the world's Bitcoin daily, contributing notably to the global supply. Beyond mining, the family's crypto ambitions extend to the launch of World Liberty Financial, a decentralized crypto exchange, and the creation of a stablecoin, WLFI. Adding to their diverse portfolio, they have also co-founded meme coins, such as Trump and MELANIA. While these meme coins have garnered attention, they have also attracted significant criticism. Detractors point to the inherent volatility and questionable utility of meme coins, warning investors of the high risks involved. The Trump token, for example, has experienced dramatic price fluctuations, rewarding some early investors handsomely while leading many others to substantial losses. Eric Trump also shared personal motivations driving the family's embrace of blockchain technology. He recounted past difficulties with traditional banking systems, citing instances where the Trump family's accounts were allegedly closed due to their political affiliations. This experience, he explained, solidified their belief in the power of blockchain to offer greater financial freedom by reducing dependence on centralized financial institutions and their associated controls. The summit served as a platform to discuss the broader geopolitical implications of cryptocurrency. Trump highlighted the emerging leadership roles of both the U.S. and China in the digital currency landscape, noting how both nations are actively refining their regulatory frameworks to foster crypto innovation. Hong Kong, he specifically mentioned, is positioning itself as a key hub for digital assets, having recently enacted legislation to regulate stablecoins. This regulatory development, Trump argued, signifies a global trend towards acknowledging digital assets as integral components of mainstream finance. As the Trump family's crypto ventures continue to grow, concerns regarding potential conflicts of interest remain a persistent issue. Despite Eric Trump's assertions that their business activities are entirely separate from the White House, critics express skepticism. The recent public listing of the WLFI token, which generated significant profits for the Trumps, has drawn scrutiny from watchdog organizations and lawmakers. They contend that the current administration's pro-crypto policies may inadvertently create opportunities for self-enrichment. This dive into the Trump family's crypto ventures shows a high-profile push into digital finance. But what's the overall sentiment from the market itself? Are the inflows we're seeing a sign of strength or a potential warning sign? And that's a wrap on today's Essential Updates. We saw Bitcoin's institutional adoption surge past $12.5 billion, solidifying its digital gold status. On-chain data showed mixed signals for Bitcoin, leaving traders to debate rally versus correction. A major food company, Sadot Group, is now strategizing its Bitcoin treasury with expert guidance. And the Trump family is making big predictions and big moves in the crypto space. Don't forget to smash that like button, subscribe to Bitcoin Bulletin for your daily dose of crypto news, and hit the notification bell so you're always in the loop. Follow us on all social media platforms for more exclusive content, and join the conversation in the comments below.